Hey, welcome everyone. I'm Ted Erhart. Hey, I want to spend just a few minutes, do a quick blast, touching on a narrow issue as it relates to this conflict, this war between the Russians and the Ukrainians. And, it's obviously just a terrible tragedy. And by all accounts, at least in my view, it looks like nothing more than a bully trying to take advantage, of its smaller neighboring country. And it's really a disgrace. But I digress. I don't want to get into that too much. What I want to focus on specifically is the financial dimensions of what's transpiring, specifically in Russia. The U.S. and its partners are putting immense pressure on the economy and the financial system over there. So I wanted to spend a few minutes kind of explaining that, how it actually transpires or how it kind of plays out and what some of this stuff means. So, for example, why did the Russians raise interest rates to 20% over the course of the last 24 hours? Well, to understand this, you have to kind of understand the basics of a bank. And I've done some videos on this over the course of the last year, so this table may look familiar to you. But just real briefly, here's the basics, and this is so fundamental to understanding what this is all about. So all banks in the world work the same way. They basically take deposits from people who have checking and savings accounts, and the bank takes those dollars and invests those either by purchasing bonds or loaning the money out. And the way the bank makes a profit is it hopes to earn a higher rate of interest than it pays its depositors. But the most important thing for the purposes of our discussion here is at any given time, a bank only has a fraction amount of its deposits in liquid cash or reserves. So the problem is, if all the depositors show up at the same time to take their cash out, well, it can basically blow up the bank, or make a bank insolvent is kind of the technical term. And this can happen across an entire financial system, and it's basically what's been occurring in Russia right now as we speak and over the last couple days. Perhaps you saw some of the videos of people literally lined up around the block trying to pull all their cash out of ATM machines. It's because the Russian people are scared. They're reading the news. They know that all these harsh economic sanctions are coming and so forth. And a lot of people are trying to get their cash out to put it somewhere else. Because, if the currency is collapsing, they'd rather own, some other currency or gold or Bitcoin or whatever they're going to bet on. But here's the point. Why did the Russians raise their key interest rate up to 20%? Well, the purpose is to try to incentivize people to keep their money in the banking system. If I told you today that Bank of America, Wells Fargo, Chase were all of a sudden offering 20% yields in their savings accounts, people would be lined up the door to put money in. And that's exactly what the Russian central bank is trying to achieve. They're trying to keep people from pulling all their dollars out. I should be more technical, the rubles in this case, in an effort to keep the financial system from completely imploding. The other thing I just wanted to mention is a really key development. The U.S. and its partners in Europe have basically frozen a big chunk of assets that are owned by the Russian central bank. And this is a big deal because it really affects the Russian central bank's ability to prop up its currency. So think about this. Here's the best way to understand this. Let's say, for example, people got sour on gold for whatever reason, and everybody wanted to sell gold at the same time. Well, what would happen to the price? It would go down. And the same is true for a currency. In this case, right now, everybody is sour on the Russian ruble. They're trying to get out of it. They're trying to sell it and buy other currencies like dollars or euros or maybe in some cases gold or what have you. So again, the price goes down. Now, central banks have an ability, they can manage this at some level by kind of acting as a market player. So the Central Bank of Russia could say, you know what, we're going to support the price of the ruble, and we're going to do that by being the buyer. We're just going to vacuum up as much currency out of the open market as we possibly can. However, they need other assets to support those purchases. So they need, if they're going to buy rubles, well, they need something to exchange those rubles for, like dollars or like euros. And by the U.S. and the Europeans freezing a significant chunk of this Russian central bank's currency reserves, it prevents them from doing that. And if the last I checked, when I was just before I was recording this, the ruble was down 20% in one day. So in other words, that means, the price of goods and services in Russia are skyrocketing, not over the course of years, but over the course of hours. And obviously the point is, the whole purpose is to try to squeeze the Russian economy and create dissent, which will, ultimately at some point, there'll be pressure put on the leadership of Russia from its own citizens, hopefully, and that plays a major part in ending this conflict. So look, that's just kind of a quick overview at a very high level of some of these sanctions, their purpose, and how they're meant to put pressure on the Russian government to ultimately end this terrible conflict in Ukraine. So I hope that was helpful. If you enjoyed the content, do me a favor, hit the thumbs up button. It really helps get the message out. Thanks for watching. I hope we'll see you on the next one.